The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Folks, we are having some volatility in the stock indices in the past 12 hours that we haven't seen in a bit. We've had a 600-point move in the Dow, 200 up, 200 down, 200 up. I mean, this is a pretty big move, so we want to pay pretty close attention to that. We've had about a 180-point move right after the jobs report came out, so we are having a great deal of volatility coming in here. Longer term, the Gartley pattern that we've been talking about for quite some time is still in vogue. I mean, it hasn't even taken out that 2750 in the S&P as of yet, or 7175 in the NASDAQ, but that doesn't mean that it can't. These markets are actually holding up really well, considering the fact that we are definitely, looks like we're in a trade war. How much it's going to be and how long it's going to last is anybody's guess, but you would think, once the news was out, that the market would either be near a low and we're closer to a high than we are low. So evidently the market doesn't believe this trade war is going to go on for very long. Whether that's the truth or not, I don't know. If we take a look here at the FTSE, you'll notice here that this one had been in a more of a downtrend this morning because we completed that 61% ABCD pattern this morning over there, and it sold off almost 100 points in the FTSE, and I imagine it's continued to go down from that level. So we'll keep a close eye on that. But the one that is the really most interesting from a technical perspective, from the way that I look at certain things, and that is the index for the let's try to get the words out, Larry, for the Treasury notes. Let's get the chart up here, and we'll be able to see it. Here's the chart for the September Treasury notes. And as you can see this morning, we have completed a perfect ABCD pattern. It went right up to that 120.20 level, spot on. And that is from the high that we made back in on the 29th of May. So that is a Gartley pattern. That is a sell pattern. It's backed off quite a bit. The bonds have backed off more than 3/4 of a point from that same level. So this could be a very interesting day here in these things because they are jumping around quite a bit. Our guest at the break is going to be my good friend from many, many years ago from the floor of the exchange, John Person. And John resides out of Florida and has some really great work. He's famous for his pivot point index that he uses for the Dow Jones, which is very, very good. He'll show us some of the things that he's looking at. He's got some of the most beautiful, colorful charts that you're going to see. It's really, it looks like the Picasso of charts. So we'll have him on at 9:30. So we'll take a look. Remember, we've got a solar eclipse and a new moon coming here on the 12th of July. That's a Thursday. That's 6 days from today. And on the 11th, what we're going to do, I believe we're going to have Norm Winsky is going to be our guest on the 11th, getting ready for that solar eclipse that we have. And I think Norm's going to make a cameo appearance on the 10th to give us some intraday timing days. That evidently there's some really nice times coming up for that he's done before. So we'll certainly keep an eye on that as we go through some of these things that we're looking. Now, folks, let's just talk about the trade war for just a second. And believe me, I know about as much about a trade war as anybody else, which is probably not much. But all you have to do is just look at, this is your FXI, which is your ETF for the Chinese shares market. And you can see that we've been in a really pronounced bear market for well over a year. This is a weekly chart. And we made a high up there around 55. We're now at around 41.95. This is the one that's been hurt the most. And so, whether this is going to be a long-term thing or not, I don't know for sure. But, this has been it's very, very oversold in the Chinese market. As you can see, we've had many gap downs here over the past several weeks, all leading up to this supposedly this tariff that we're having. So we'll see. Now, you know, you hear so many different things, and believe me, everybody that there's only one person that thinks the tariff is going to be positive, and that's our president. I mean, hey, I'm not saying he's right or wrong. I'm just saying that everybody else is on the other side of the scale, and I don't know what it means. And you know, you'd think that that would be it, but if it's been inequitable for many, many years, maybe he's on the right side. I don't know. The market is not showing a lot of fear into a trade thing. You know, this is one of the things that caused the big problem back in the 30s, folks, is when we had this protectionism stuff. So this is something we really don't want to be doing, but we also want to be fair. So that's the end of the soapbox. Going to get off the soapbox and move on to some other things that we want to look at. Let's just talk a little bit, since we're talking about tariffs. Let's take a look here. Beans are really, really low. We're down around 840 in the beans now. That's down from 1050 right on Labor Day weekend. So it's down $10,000 a contract. But look at the wheat, folks. The wheat has held the 78% level now for well over 3 days. We had a pretty good rally yesterday. We rallied about 14 cents. It's beginning to look like the people are going to be eating wheat no matter what. So keep an eye on that wheat market. That's the one that's interesting. Also remember that our corn market is down near that magical 360 a bushel level. So pay attention to that. It should be pretty good. Yes, I see we got some hurricanes coming into our favorite part of Florida down there in the Clearwater area. So we want to be careful of that, because hurricanes will cause, you know, disruptions in, you know, fuel and natural gas and all the other stuff. So we'll see. We'll be see. Anyway, I don't really know. I really don't know about the trade wars, folks. I really don't know. I'm just looking at the charts. The charts are saying that we're topping. You know, you're basically looking at a, you know, really negative Gartley sell signal on the Dow Jones and on the New York Stock Exchange Index, and you're not seeing a whole lot of difference. When you see swings like we've had this morning, last night we were up almost 160 points in the Dow. We dropped 200 points, rallied 200 points. We've had a 600-point swing in the Dow and hadn't even opened yet. So, you know, this is the kind of stuff that you'd like to see. So we'll pay pretty close attention to it, and we'll see what's going on here. Anyway, we'll be watching these intraday here, but there could be anything could happen, and it usually does. That was one of Mark Douglas's favorite quotes. So we'll see if that is going to happen. We'll keep an eye on some of these things that we're watching, because we've had a pretty good move here in the bonds and the notes. They've had to went up and hit those highs, made those big ABCD patterns. So that's another one that looks really interesting. We're now off another 150 points off the high in the Dow Jones Industrial Average. So that's another huge swing that is going on quite a bit. The gold is holding up. We have had only a $9 correction after we made that big bottom down there to 1238. I believe if we can clear gold above 1263, that's going to be the time to say, well, it looks like this is what we're ready to go as far as you know, going higher in the gold market. So I'd like to see it come down to 1246 one more time, but might not do that. We'll see. Anyway, we'll keep a close eye on that. We'll take a little break here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted a chart here of spot copper. We're looking at September copper here. This is a textbook chart, folks. Let's take a quick look at it here, because after we made that double top up there at the 331 level, we've been down for 3 straight weeks, just solid. But look what's happened now. You'll notice that the 61% retracement came in at 279. Now, all I'd like for you to do now is to scroll your eyes way over to the left to early January of 2017, and you'll never guess what that high was. You get one guess, folks, and you got it, 279. So we went back and touched those old highs exactly at the 61% retracement of the 382 low from April of that year. This is really important, folks, because copper is ready for a rally. I don't know what it has to, how it's going to do it or why, but it's got a real shot. We're 3 cents off the bottom right now, but it looks like we could get at least a 382 rally that would take it back to around $3. So this is a beautiful chart. This has to hold this 279. Below 279, you know, it's going to 230. I mean, this is really an incredible chart. It's got everything that you could possibly ask for. You also have that 1.618 expansion from the low from March up into May. So all of that lines up that copper is at the proverbial, you know, moment of truth. So it's something that I think that you know, deserves your really attention, because it's got a real shot of doing it. Now, I wanted to mention, just since we're talking about the copper, let's just switch over to gold for a second, because I wanted to show you the same type of thing, only opposite in the gold. And that is, you'll notice that when we broke below that 1.618 expansion number at that 1263 level, you notice that we broke down below it, and now you've seen the market come right back and touch it again at 1263. That's why if we get above that 1263 per ounce now, that'll actually be quite bullish, because that will reaffirm that 1.618 number. And remember, we were looking for 1220 and we got down as low as 1238. I'm not sure, you know, whether that's going to be the case or not. Now, platinum went through it by about $20. So, you know, it's just a real strong seasonal this time of the year. July, August, and September has a very positive bias for gold. So we're looking to get long this. I believe we get above that 1263. We've got a really good chance. But what I'd like to see, and you don't always get what you like in this business, is to see a nice 61% retracement down to about that 1247 level, and that would be a pretty good place to look. You'd be down, your half of your harmonic number, $17 in gold. That would get you right at that number, and you wouldn't have to risk very much at that point if it can actually do it. So we'll have to give it a little bit of time to see if it's going to work. But that getting back to that copper, that's a real interesting one. I mean, there's no there's no decision to make. You get below 279 in the copper, and boy, it doesn't have any support at all. But it's right there right now, right at those old highs, and right at the 61% retracement, right at the 1.618 expansion. We're down 3 weeks, so you can definitely put that in the oversold category. And if it closes good today, that would mean you'd have a hammer bottom, and that would be something that Steve Rhodes looks at quite a bit. That would be very interesting to look at also. So watch the copper, and whether copper is going to make the stock market rally or not, no one knows that. But all we do know is that there's a lot of news about the trade thing. So the markets are just not, they're not acting really bullish right now because they gave it all back. But the fact that they're not down quite a bit, given the fact that we're coming into this, supposedly starting yesterday, really not much happened. So I don't know. We haven't had a trade war like this before. There's no really precedent. To look at. The one we had way back in the 30s, that was, into the start of the Depression, so business was already bad when that one happened. So we'll have to wait and see, what's really going on. The Euros made almost a 78% retracement of the move that we had, back around the 1810. That came in around 1770. We've been to 1763. We're trading around 1753 right now. So that's another one that's quite interesting. Also, if you recall, we were talking about the crude oil market. We were bearish the crude because it looked like it would made that big top up there at that 3-drive pattern. And if we take a look here at a 30-minute chart on crude over the last couple of days, it's had 2 interesting patterns. We had a really nice ABCD yesterday up around the 74. 80 level. We broke down, and then last night we made a 382 retracement up there around 73.30, and we broke another $1 a barrel. So that tells us that we're heading probably down to that 71.30 level in the crude oil. Whether it's going to do it today or tomorrow or the next day, but that's what the ABCD structure sets up on the crude oil if it in fact is going to get down to that level. We've had a couple questions about the cattle market. We were looking at that August cattle contract. It's gone up here, and it stopped right at this 61% retracement now for 3 days in a row. It's not gone any higher. So that pattern is still intact, but it hasn't broken down either. So that's another question that you have to ask yourself, is that once you get to these numbers and doesn't start to move in your direction, you also have to start thinking about how to protect yourself if the market really starts to rally. These grains are just totally oversold with the exception of wheat. We're having soybean meal, soybean oil, and soybeans are incredibly oversold. Corn is oversold, but that they can stay oversold for quite a while, especially if the world thinks that they're going to stop eating, and that's not going to happen. But there will be a rally. My assumption is we're coming into this solar eclipse here next Thursday, and that might be enough with that new moon, might be enough to make it move. But right now, I don't see a buy pattern with the exception of the corn. I believe the corn at 360 in Christmas corn, and we're trading around 362.5 right now. I believe that's got some pretty good patterns in there, 135 pattern on the long-term monthly chart that we've shown here several times, and also our good friend Mr. Z. Mr. John told us about that one too. So that's held up, relatively well, considering we're in the midst of all these tariffs and things. We'll see. Hey, folks, the world might be able to live through these tariffs. We don't know. I mean, it's not fair. If you've ever been to China, you don't see American cars. I mean, if you see an American car, you see somebody that's got a lot of money. But you'll see a few Buicks. You'll see a few Mercedes. Well, Mercedes, not an American car. You'll see a few Buicks. You won't see any Cadillacs. You won't see any. Well, you might see a Corvette, but that's very, very, very rare. But you will see Porsches, you'll see Volkswagens, lots of those, lots of Mercedes, but you don't see U.S. cars. So, and pretty much same thing in Europe too. You hardly ever see a U.S. car. And that's because they whack us pretty good, but we don't whack them. So we'll see whether it's going to be going. Now, there's a lot of talk here about the Aramco deal, whether that's going to go through or not. You know, folks, that's beyond my pay grade, so I'm not going to worry about that. I'm having a hard enough time keeping up with all the commodities in the foreign exchange. So we'll be keeping an eye on these as we go through the rest of the morning. We're going to take a break here pretty soon, and we're going to have John Person on. John is a very experienced and a terrific trader, super all-American good guy, so you'll enjoy his presentation. He got some beautiful colorful charts. You'll see that you'll get. Anyway, we're going to take a little break here, pay a few bills, and we'll be back with John Person, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I believe we have John Person on the line from sunny Florida, getting ready for another hurricane. John, how are you?
Larry, how are you, sir? Well, it's not so sunny, but yeah, this is the time of year we get ready to pack it and fly up north.
I don't think we do that.
I know we got a lot of market stuff to cover, but we call ourselves a spread trader. And you know this phrase, Larry, and I'm going to put it in perspective for you. There's an old phrase that I heard decades ago, and it was, bulls make money, bears make money, and sometimes spread traders take all the money home. Now, the reason I say that is because we're kind of spread traders. We live like half the time in Florida and half the time, we travel or go back to Chicago. So some people call that a snowbird. We call it a spread trader. You sell Chicago in the winter and you go long Florida in the winter. So we're doing the opposite. We're unwinding that spread pretty soon. That's what I'm talking about.
Have you had any damage with hurricanes recently, John?
Well, we haven't had a hurricane. The last one was a kind of a, thank God, a false alarm Cat 5 last September, where we had an exodus of 12 million Floridians that left the state of Florida on I-95. I think they spent more time in their cars on the highway than they did escaping the hurricane. But we've not had. We're really well protected here. We're in North Palm Beach County. We're very lucky, and the weather year-round is awesome. It's I don't want to sell it because we don't want any more people moving into this section. It's getting real crowded. The secret's starting to get out. But no, we haven't had a lot of real significant damage to say from any of the hurricanes.
Is that where the Breakers Hotel is?
We're blessed. We're lucky. So we knock on wood.
Is the Breakers Hotel near where you live?
It is approximately 7.8 miles from where we live, correct.
Yeah, that's a really beautiful place. I like that. Let's talk about these beautiful, colorful charts you have here of the SPY, the QQQs, and the Dow Jones. What are you seeing, John? Do you make any sense out of this tariff stuff that's going on?
Well, what I sent you was some really interesting analysis stuff that I've been working with for probably as long as I've known you. A lot of people think I just do person's pivots, which I noticed your sponsor of Thinkorswim. My indicators are on their platform. So your users and listeners that are Thinkorswim customers can find my person's pivot indicator there. What the charts that I sent you have, the spiders, the Qs, the diamonds, the Russell IWM, NASDAQ Composite, and the NYSE. In the middle quadrant, that pretty pink fuchsia color, is the advanced decline cumulative ratio line on each respective individual index. And what it shows is that we are still not breaking down with the advanced decline. Now, what does that mean? More stocks are still advancing than less stocks are advancing. In other words, there's more stocks being bought, and when we saw the Russell dip before the holiday, it seemed that there was an accumulation, so that pink line was moving up. And so the same thing can be said with the NASDAQ Composite. The same thing can be said, ironically, with that New York Stock Exchange Composite Index, and a lot of traders follow that one. And as you know, friends like old technician Sherman McClellan, the McClellan Oscillator deals with the advanced decline based on the NYSE. And again, Richard Arms, who is now in the broker lounge in the sky with other friends of ours who have passed away, the Arms Index was based on the data from the NYSE. So it looks to me, until we get a breakdown of this advanced decline, until really we get this clenching hand of investment attitude of buying stock solely, until we start to see that advanced decline slip, stocks, in my humble opinion, are still the place to be, as much as I don't want to think so.
Well, it doesn't make any difference. You can make money on the long side, make money on the short side, and also if you spread bet, you could do that too. John, we have a question from one of our listeners, and that is, do you see any indication that we could be looking at a crash in the stock market? I hate to put you on the spot, but that's the question that they're asking.
Well, that's a good question, and I think the best analysis is, according to any stock market crash, breadth analysis, because of how the game is rigged or how the game's put together, is these indices are capitalized weighted stock indices. So when you start to see everyone in Apple and everyone in Google and Adobe and all of the technology and NVIDIA, and yet the rest of the sectors such as biotech or industrials or healthcare and staples start to sell off and no one's paying attention, you're going to see that decline in the AD lines. I don't see that yet, so therefore the answer is no, I don't see the crash yet.
Okay, well that makes great sense, and it's a good description of what you're seeing. And when you look at these charts,
let me sum it up better. I see a sector rotation correction under our guns, and that's what my work suggests. We've gone from eliminating some taken froth off the table in some technology, and it's moved into staples. Look at Kellogg's. The stock symbol is K. So the staples, Coca-Cola is finally lifting up a little bit. Some of the biotechs are lifting up. Sanofi, Advantis, and I know I'm going to get hung by not pronouncing some of the stocks correctly, but SNY is that stock symbol. Regeneron, Celgene. And today we have a couple names that had popped up on my radar screen as daily buys, which we could see a little bit more upside in some of those drug/biopharma names. So that's kind of what I think we're seeing here is just sector rotation correction under we're undergoing that right now.
Mm-hmm. Okay, John, the next thing we'd like to do here is if we could switch over and talk a little bit about the yellow metal. Everybody at TFNN loves the yellow metal. And what do you think about gold in here? What's your feeling?
Well, part of my work, and not to give myself a shameless plug, but I did this thing called the Commodity Trader's Almanac years ago under John Wiley and Sons. And what I brought to the table was looking at my years in experience in commodities, but yet apply it to ETFs and individual stocks. So the bottom line is this. Seasonally speaking, gold starts to bottom out sometime late July, early August. But volume analysis does not suggest that we're seeing great accumulation patterns in gold yet. However, what I am starting to see, and that was the charts that I sent you, Larry, was comparing gold with the miners and the three-time ETF, I think NUGT I sent you, correct?
Yes, we're showing it now, yes.
Oh, good. So basically what that chart with all the colorful indicators, one is what's called a relative strength, and it's identified as the PMC indicator, which is it's a relative strength tool, which is another one of my proprietary indicators that's on Thinkorswim's platform, by the way. And you'll notice that the PMC is starting to turn on GDX, bright blue or positive. And that's showing accumulation that it's starting to outperform the overall market. And that's positive. That means money flow is money moving into GDX relative to the actual gold itself. So the miners are starting to move. And then because the world is all about alpha, collecting the best rate of return or most efficient return of capital, you're looking at the ETFs and the leveraged ETFs. So to see if that theory holds water, if they're really intrigued in buying the miners, then you would start to see maybe some of these savvy hedge fund managers move money into the three-time leveraged ETFs. And guess what? We have that confirmation too, because the indicators, both the volume, on-balance volume, and a momentum indicator and some other proprietary indicators that I've created are also reflecting we're seeing an increase in momentum in NUGT nuggets, the three-time ETF on gold.
Hey, John, we got to take a break to pay a few bills. Could you come back and maybe we could talk about crude oil?
Absolutely, Larry. Thank you.
Okay. We'll be right back with John Person, folks. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, talking with John Person. And John, we have a question for one of our listeners about the dark red moving average line that you have in there. Could you describe what it is and what the significance of it is that you use in your trading? If you can. If it's proprietary, then you don't have to, but if you could, we'd like to hear it. At least he would. Uh-oh, did we lose connection?
Yeah, I'm here. Larry, are you there?
Okay. Yeah, I'm here. The question we had is
which chart are we referencing?
Yeah, the 250-day, or it's the red moving average. It's there. Could you explain to the folks the significance of it? One of our listeners has asked that question.
Yeah, it's not a real big deal. If you're talking about on the layout of the 6 charts of the indices, taking a look at all six top indices. That's simply, and I don't mind revealing that is not proprietary. What that is a just simple 20-day moving average. And the reason I just look at a 20-day moving average is that in the old days, in my very first book I wrote about 2 decades ago, I used a 3, 9, 18-day moving average. Bollinger came out, John Bollinger that is, came out with, and through the aid of, not to give a history lesson on technical analysis, Greg Morris, and helped develop Bollinger Bands, the 20-day moving average seemed to be something that a lot of people use because they like using the Bollinger Band and blah, blah, blah. And so I like to look at the 20-day moving average only to see from a contrarian census of what others might want to look at, because a lot of signals are generated by a crossover of price beneath the 20-day moving average. It gives sell signals. Above it may give an intuition of upside movement. I also like to look at that only on stock indices because that seems to be something that a lot of hedge fund managers, they go through a training and they're all one-sided. They like to look at the 20-day, the 50, and the 200-day moving average and Bollinger Bands. So that's not to be, I hope I don't sound callous or insignificant to people, but that's the reason I use the 20-day moving average, not to generate trades without a doubt.
Okay, that's a great description of it, and I certainly remember those. I know Greg very well, and of course I know John Bollinger for 30-some years. So anyway, the next question that we have, you want to describe what you're looking at here in the crude oil complex? You've got crude oil up here and the OIH. Give us an idea of what you're looking at here, John.
Yeah, basically we're starting to see a little bit of not dysfunction, but I'm rolling over. I'm a little cautious, been bullish, was bullish crude, less bullish crude now. Looking at the CLQ, the August contract, the momentum of volume is starting to dissipate at this rally. There's a bright blue on the CLQ18 symbol on the first chart, I think, on that graph of 3. is a doji pattern. Part of my work had to do with a lot of doji analysis, and I have these patterns that I uncovered and revealed and published in works in most of my books called the high and low close doji. So if the market closes within so many days of a doji, it generates an actual sell signal, and then we use volume analysis to see if that sell signal is confirmed. And right now we are seeing a loss of momentum, so I'm anticipating to see a pullback or a pause consolidation in crude oil. If it does, then we're going to start to look at what a lot of traders like to use, and a pullback. So let me give you the defined analysis. If we close today on a daily basis, I expect to see a move back to like maybe 67, 69 range. And, you know, I give a $2 range because this market could see 67.80, 67.20 at 3 in the morning, and then by 5 in the morning we're at 69 again. So, you know, I would be right, but it's an untradeable low. So I give that range. All right. Now, for equity traders, most people prefer to trade XOP from a swing trade perspective because the average daily range is a lot greater and it's a little more volatile. And the price is right. It's a $40, $42 instrument. So a lot of people have been in the XOP relative to the OIH, the oil service sector. And I think there's a bigger base being built in on the OIH. And as we get into September or October, you want to probably focus, and even maybe in the next week or two, start watching for building volume in accumulation in the OIH. I think it will outperform the market. So that's why I sent crude oil, XOP comparing against OIH.
Wow, that's a really good description, John. Wow, that's terrific. I really enjoy that. Now, if the folks would like to get a copy of these charts or to contact you, what would be the best way to do it?
Well, first off, if they're being broadcasted by you, then, you know, Larry, you're my old friend, and if you want to give those out to your peeps, then that's your prerogative. And if they want to get a hold of me, they can come find us at personsplanet.com. And there was all kinds of great information there. If they want to get a screen capture of those charts, I'll certainly try to help them out and send those to them for them.
How many of your indicators are on the Thinkorswim platform, John?
Well,
that's a pretty big thing.
We like to call it, from a compliance standpoint, a bullish and bearish momentum. It's the PPS indicator, and it paints those arrows up and down on the chart. And what's really cool about that PPS indicator, that's one, is you can use the scanning function in Thinkorswim. Next, I have the person's pivots, which is a phenomenal tool, which most people don't understand what it's really about. It's a price momentum, and it's also a bullish-bearish momentum indicator. It gives us an idea of what the price action is for the next time period, whether it's daily, weekly, or monthly. Next, we also have this relative strength indicator to help traders identify the strength or weakness of a stock or a sector versus the benchmark S&P, and that's called the PMC indicator, and Thinkorswim just added that, which, by the way, it's a very powerful tool for equity traders. It's incredible, and it's one of the very few platforms that has that function or that indicator for clients. And so Thinkorswim's done an amazing job in helping to at least their clients use my work, and they're very popular tools. They're amazing. So
well, you've done a super job for sure. I've always liked your pivot points. I saw those 25 years ago, and I always thought they were great then, and they still are. So, listen, I want to thank you for being on the show. We'll have you on again if you can, and I want you to make it through that hurricane season without too much trouble. Okay?
Well, you know, as long as it doesn't affect my golf game, and we're going to be, we'll be skedaddling out of here pretty soon. We'll be up in Chicago at the Traders Expo in the next few weeks, and we'll be spending some time up in the Midwest for the summer. So,
if you get some time in the wintertime, come out to Tucson and see us. The weather's nice out here in the winter.
Hey, in the wintertime, come down to Florida and visit us here, Larry. It's really good down here too.
Okay. Hey, John, thanks for coming on, buddy. I really appreciate it. And tell Mary I said hello.
Carrion. And I hope all your listeners know that. But you're the big lovable lug, man. Thanks, Larry.
Oh, thanks a lot, John. Okay, we'll be right back, folks. We got a break here to take. Markets come back really strong. We made a new high in the NASDAQ, which is not unusual because the thing jumps around quite a bit. So this market is not showing a lot of fear from tariffs, that's for sure, at least not yet. like John mentioned, there's not much showing in the advanced decline line. I mean, it's still going higher, so there's nobody really selling a lot of stock as of yet, but that can change quickly sometimes. So, but right now we're still down on the day in the Dow Jones. The NASDAQ has come back pretty good, but we need for the market to really get a bullish momentum. From my perspective, is we really need to get that S&P above that 2755 level. And that would say, yes, we've cleared some pretty good spots. If we take a look here, and we're going to show this chart before we end the show, and that is the one on the New York Stock Exchange Index, and I think that's the one that really means a lot. And I'll post it now. We'll talk about it when we get back from the break. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, during the last break, I got 2 emails asking me to discuss the influence of these tariffs and all the things that are going on with the trade war. So here goes. Okay, now that we've finished that, I don't know anything about that. I really don't. I don't understand it. The good part is I don't think anybody else does either. And that's including the PhDs, economists that are out there. We haven't gone through anything like this before, at least not at this level, so we're going to see what really happens. The market's really saying that, hey, this is not a big deal. And I don't know if that means much or not, but pay attention to what the market's telling us. The market's not getting hit very hard. We're still in as you can see from the New York Stock Exchange Index, we're still in a very strong Gartley sell signal. We've only been able to rally back a little more than 382 on the NYSE index. NASDAQ has been stronger, and the S&P's been stronger, but we need to get that S&P above 2755 in order to turn the trend up, in my opinion. So not really much has happened. Now, maybe something will happen overnight that'll change it all, but frankly, they're not saying much is going on. Maybe somebody will say uncle and say, all right, we'll take the tariffs and move on and do the next thing. We're going to live through this. This is not the end of the world. If we can get through nuclear war, we can get through anything. So we'll see if we can make it through both of those. But right now, the market is basically telling you that, it's not moving. We're having a pretty big move in beans today, folks. We had a 17-cent rally in beans, so maybe they're finally saying that the market is had enough, and we're going to have to start looking to eat again, is what they're saying in some of these other countries, because they're going to have to buy food from somebody. That's for sure. So listen, everybody have a wonderful weekend, and try to do something nice for somebody that has a lot less than you, folks, because we live in a wonderful country. They have a lot of great stuff. So people that don't have quite as much as we do, give them a break and try to help them the best you can. Follow what the market's going to tell you, folks. That's where it's going to go. If it hits really hard, it's going to go down. If it doesn't, it's probably going to go up. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!
No matter